Good morning, everyone, and welcome to Weekly Profit Talk. As you might imagine, we do this every single week. We do this on Wednesday morning at 8:30 a.m., be that Mountain Standard or Daylight Time. That would be 7:30 for you West Coast folks. That's easy for me to say, and 10:30 for the East Coast. So, good morning, welcome. The topic this week, we're nearing the end of the year. And so we're talking about end of the year type things. And this week we're going to talk about solving the S corporation health insurance deduction puzzle. Now, this is going to be helpful to you if you already know what an S corporation is and you either have already elected to be taxed this way or you're thinking really hard about it. And if you are and want help, we're here to help you. So, by the way, I'll talk to you a little bit more about how to get that help at the end. So, let me go ahead, please, and I'll do this for us. Share our handy dandy information on the side. Okay, your S Corp can pay your health insurance premiums. Ideal scenario A is basically you set up your situation with your insurance company so that you are in fact they are being paid by your S corporation and their legal name, whatever name you've registered in your home state. Now the Internal Revenue Service will allow you to um, deduct your S corporation health premiums if you pay them personally, and then you reimburse from your S corporation. If you're going to do that, then you need to make absolutely certain that you are withdrawing the exact amount of the premium, no more and no less, when you make that transaction to your personal account. But the cleanest way is just basically set up the health insurance in the name of your company. Okay. Natural first step, your S Corp pays your health insurance premiums. Great. Now, our federal government requires that you claim this as ordinary wages, not subject to Social Security and Medicare tax on box one of your Form W-2. Um, I can picture this because I see a million of them. So box one is basically your gross wages. Box two is your federal income tax withholding. Then box three is social wages, and box five is Medicare wages, and each of their even number boxes are basically the amount of tax you pay on each of those. So, what'll happen then is let's say that your reasonable comp for the year is like $96,000 and you had 24,000 in insurance premiums. Well, your box one is going to be the sum of that, or 120,000. But your social and Medicare wages will only be 96,000. That means that only that amount is subject to FICA. Okay, so you do not pay self-employment tax on premiums. If you think about that, that's only fair because it's basically not self-employment income. Okay, so that's tax break number one. This gets better because you're probably already thinking, well, if I've got to claim this as income, that means I'm paying tax on it, right? Well, yeah, but understand that when you pay a wage to yourself or to anybody else out of your company, that is a legitimate expense of your business. Comes under cost of goods sold, which is staffing expenses, and that will reduce your gross income to something called a gross profit on the S corp return. It's also called uh, it's gross income on the I'm sorry, I'm trying to remember. Profit and loss statement is called gross income on the tax form. It's gross profit, but it just basically means the same thing. It's your gross revenue minus the costs of making the widgets or paying the people that do it. And for medical practice, scenario B is basically in effect. So you're going to have the person making your appointments, any highly trained staff that you have, medical professionals working in your practice. These people should all be being paid wages above the gross profit line, and that includes you. So that means that you are reporting these healthcare premiums as a cost of wages, and that means that you're going to be reducing your net income from your S corporation. You'll be paying less tax by $24,000 on that amount. Okay? Sounds good so far, but as I say in the bottom here, this appears to be an in and out transaction. And at this point, maybe you're saying, where's the break? Stick around because it's coming. Okay, so next. Let's see. Okay, here we go. So here's a two-step protocol. I'll go over this again, the premiums you pay to your carrier must be reported as wages. You do have a ceiling on deductible premiums, yeah, which is the amount of comp you're taking. Let's say you're in your first year or two of practice and you're not making the 500,000 gross a year that a, a decent sized practice will make after being in business a few years. Um, for example, let's say you're somewhere around, I don't know, $300,000 a year. I believe reasonable compensation is that amount of money that the federal government can expect you to take as a wage based on the amount of money that you take in after all expenses. So I would pay somebody somewhere between 45 and 50% of that 300,000. Let's call it 144K. All right. So, and actually, this is going to be a bad example because it's sort of high. Let's say you're in your very first year of practice and you've convinced yourself that you want to be S Corp and you've got $100,000 in income and you've taken $48,000 in reasonable compensation, just under half. Pretty reasonable, very difficult for them to find fault with that. And this is based on tax law and court records filings. So I feel pretty confident that's legit. But let's say that you've got family coverages and you are going to pay in excess of that amount in premiums, say $50,000. Well, that additional $2,000 will not be deductible. Okay. So keep that in mind. It's kind of a rare scenario, but I just wanted to bring it up. Probably spent too long on it, in fact. You just need to do proper documentation. Make sure you're establishing the arrangement under the business. If you are the sole owner, just make sure that you're documenting it. Put it in your notes. And of course, make sure that you've got a good, that is another reason why it's a great idea if you set up your insurance premium um, transactions as coming from your business, because that basically makes the relationship between the business and your health coverage unassailable. So submit your premium invoices to the S Corp for reimbursement and have the S Corp properly report them on your W-2. Okay. So we've talked about this already. Now, where it all resolves to make sense. First of all, I want to talk about one thing here. There are some other things that you are able to get coverage for, provided that it's under that ceiling of reasonable compensation. Um, what if you're over 65? Medicare supplement premiums come into play. Dental and vision coverage. You are actually able to write that off from your S Corp as well. Long-term care insurance premiums, that is subject to age-based limits. So the older that you get, the more it costs. And you think about it, that makes sense. I kind of hate it, but I understand them. And qualified health insurance for family, of course, it's extremely important. And even if no members of your family are a 2% or more shareholder in your S corporation, that still qualifies. So here's where the tax savings actually occur. This is the part you've been waiting for. Now, you've reported the wages. Excuse me, you've reported your premiums duly as wages on Form W-2 in Box 1. You have written that off as a expense of your S corporation, but you are able to write this off on line 17 of your Schedule 1 on your 1040. There's a line called self-employed health insurance deduction, and bang, you put your $24,000 there, and that will reduce your gross income. It's another deduction that occurs before your standard or itemized deduction, and of course, any qualified business income deduction that you're going to get. So there is where the tax break occurs in doing self-employed health insurance. Okay. Because basically, as a solopreneur, or even if you're a partner in an S corporation, the stipulation is you need to be a 2% or greater shareholder. Um, all the good stuff happens in an S corporation when that occurs. Let me touch on that for a second. You may wonder why that's a deal because either A, you run your practice yourself, you own 100 shares of your own company. Great. So you're the boss, you make all the decisions, and this whole point is moot. Uh, Basically, you are a solopreneur and self-employed. But let's say that you opened your practice with four peers and you all have different specialties that all complement each other, because that's what a good partnership does. Let's say you're all 25%. Well, you're still over the 2% limit, and all four of you qualify for this deduction. Okay, so again, this adjusts your gross income prior to other deductions. And the premiums that are reported as wages, remember, they're not subject to FICA. So You're also beating that 15.3% there. Effective tax rate on that after the small adjustments, still over 14%, 14.13 to be exact. So um, it is in your best interest to pay for your health insurance out of your S corporation. If you're not already doing that, it's time to start. If you're not completely comfortable with how to proceed with that, this is what we do. And this is the part that I told you that I'd share at the end. So we're coming to you live, not only on Facebook, but LinkedIn and YouTube as well. We're basically doing a blanket stream. And the thing that all three of those have in common is they have a comments capability. You can write help or S corp, health insurance, or more information, or please write back to me, or whatever you want to say. Say something funny. Say Merry Christmas. We will answer you within 24 business hours and explain to you how we can put together a time for you to have a chat with me directly. The first 45-minute talk is completely free, and we find out if we're able to uh, do business with each other and see if we can provide you the kind of benefits that we're providing for many other people already. So I hope that you've found this helpful and it's given you some ideas because you can save. It's effectively going to be the using the same word twice, but your effective tax rate multiplied by the amount of premiums you pay. Let's say you're in a tax bracket where after you deduct everything, your taxable income divided into your tax is a 20% effective rate. That's where that number comes from. So basically, that means that you're paying 20% of the amount of your taxable income. So if you reduce that taxable income by $24,000, that means that you're saving 4,800 bucks just by doing this. If you're not doing this, you're basically giving the 48 bucks to the government for no reason at all. And between you and me, I don't like the way they spend our money. So let's not do that anymore, okay? So with that, next week we'll be coming to you live again. Wednesday is going to be Christmas Eve, but we're working both the eves in the morning. So uh, I'll think of something fun to talk about next week on Christmas Eve morning. And until then, I hope you're having an amazing day in holiday season so far. And if you have a chance, do something randomly kind for a stranger today. So until next week, so long. I hope you enjoyed today's talk and if you'd like to speak further, let me know. Thanks.